Happy Valentine's Day. What more romantic thing to talk about than banks and savings accounts? Ooh, baby. Yeah. All right. You keep dropping money into a savings account at the bank, right? But do you know how banks really work and how they make money on your savings? Well, keep watching and learn what's happening with your money when you use a bank. And as a bonus, stay till the end because I'm going to show you how you can turn those rules around on you so you can make money off of them. All right, so first thing you gotta understand is what are the rules that banks follow? Because you gotta understand how they think. Because if you understand how they think, you can make it work in your favor too. So here's the rules of the bank, and I guarantee no matter who you are, you could be a kid and you'll probably get this. So here are the 5 questions I have for you. Number 1, how much of your money do the banks want? All of it, right? Number 2, how often do they want you putting money in? All the time, right? Number 3, how long do they want it in there for? Forever, right? It's like the Sandlot, forever, right? They want it forever. Number 4, how much they want to give back to you when you want it? As little as they can. And then number 5, how much risk do they want to take? Very little. They want to take low risk. They like low risk, great high returns. So remember those rules. They want as much of your money as possible, as long as possible. They want to put it in as often as possible, give as little back as possible, and then take as little risk with your money as possible. And there is the secret. Now, many people wonder like, well, yeah, but when I put my money in the bank, it just sits there, right? It just sits there. They just like guard it. You know, they might put some guards, armed guards around it. These are my armed guards right here, my little finger guns. Pew, pew. You know, you get your armed guards around it, right? And then it just sits on the shelf and collects dust. And then you come in for it, you ask Mr. Banker, hey, you still have my money? He's like, yeah, I still got your Washingtons and your Franklins over here. Here you go. And there's your money, right? Hopefully we know that's not what they're doing with your money. Because the truth is, if you've been around the block long enough, right? And I've been around a few blocks, you know, you've been around the block enough, you'll know that they're taking that money and they're going and leveraging it. They're taking your money and they're loaning it out, in many cases, back out to you, aren't they? They're giving it to you in mortgages, they give it to you in car loans, they give it to you in credit cards. They're loaning that money back out to you at a much higher return, much higher interest rate than what they're paying you. You're thinking you're all awesome because you're making that 0.1% in your bank account, if you're making that much. And then they're coming around saying like, well, thank you very much. That 0.1%, I'm now creating what's called arbitrage, right? Arbitrage is where they take your money and make more money with it than what it cost them. That's what they're doing, right? So they're taking your money and then they're saying, hey, let's make even 6% on your mortgage. Think about it. They pay you 0.1% on your money. They turn around and they give you maybe a car loan at 6%. Do the math. $10,000. Let's just say that's all you put in there. 0.1% means you get paid a whopping $10 a year. Yay! That's so awesome. No, it's not. It's horrible, right? $10 a year on $10,000. But they're taking your $10,000 and they're making 6%. That's $600. That $10 investment they paid that you're costing them is making them $600. Do you think they really care about the $10 they're paying you in interest? By the way, this is key. Understand this, that banks do not fear debt. They understand it, they respect it, and then they use it to their advantage. That's what arbitrage does. Because if you're trying to follow the rules like by our good old buddy Dave Ramsey, right, where he says, hey, you should not ever have debt. Debt is stupid. Don't do debt. It's stupid. Do you realize that banks love Dave Ramsey? Because they love it when he tells you to do that, when they make so much money off your money sitting in those dumb savings accounts. Because they are going into debt to you. Understand that. They're paying you interest. They have debt to you whenever you put money into a savings account. You understand that? This blew my mind when I first learned this. Even though I was a financial advisor for 4 years, when I learned this, it just blew my mind because I realized, wait a minute, debt's not evil. Because, for example, have you ever heard a bank call you up and say, hey, Mr. Client, hey, we've loved the fact you've banked with us for the last 20 years. You've been so good to us. But we just watched the Dave Ramsey show. And on that Dave Ramsey show, he said debt is stupid. And so we're going to actually pay back all of our debt. So that $10,000 you put in your savings account, we hate paying interest. Because do you realize that $10 a year, after 100 years, that ends up being like $1,000. Oh, that's horrible. We're in bondage to debt. So we're going to pay all your money back. You say, well, no, I want the money in savings. I'm putting it in there on purpose so I at least make something so I can lose to inflation a little bit less. No, you got to take it back. We hate debt. Banks will never say that, right? They'll never say that. So what are they doing? They're taking your money, they're paying you a little bit of interest to then make a lot more interest. Oh, and by the way, they can actually borrow more than what you give them. They're legally able to borrow, depending on the state, sometimes more or less, at least 6 to 10 times whatever you give them. So if you give them that same $10,000, they can loan out 10 times. That's $100,000, making 6%. Now they're making $6,000 a year off your $10. They literally made bank, didn't they? Now the question is, how can you do the same? Here's how you can do it. Turn the tables back on them. One, you could do, if you're just starting out, you could do something like an infinite banking policy. With a whole life policy where you can build up cash in there, you can actually leverage money as well. Because now you have money in savings. This is a safer way to do it if you're gonna leverage debt, right? Because you don't really have debt. You have money in savings in the life insurance account, but then you can get a line of credit against it where you pay them, ultimately, if you do it right, less in interest than what they pay you. So you get to make bank off of them doing the same thing. This is also how Walt Disney was able to pay for Disney World. He borrowed from his life insurance policy. He got a line of credit against it, using that as collateral to then go and put the down payment on Disney World. And now we have the happiest place on earth thanks to using his own infinite banking policy. You can do the same thing as well. There's another way you can do it too. Even if you didn't have the infinite banking policy, you don't even need that to become financially free. But you can do this. You can also just borrow money from the bank. For example, do you own a home? Does that home have equity in it, especially after the last few years? Could you borrow that money in equity and use that to make more money than what it costs you? Now remember, we don't just look at interest rates because you can get duped on that. The big thing you want to make sure, if you're going to borrow money, be careful. If you're a spender, don't even do this. You're going to blow the money anyways, right? But if you can be wise with your money and take that money and invest it in places where they're like real assets, like real estate. If you're going to borrow money from equity from your home, a good place to put it is into other homes, right? Go from real estate to real estate so that your equity is just moving to different properties. Now, there's gonna be a cost to it. The bank is gonna charge you X amount of dollars. You wanna get the lowest payment possible, just like they do with you. They wanna pay you the least amount possible so they can turn around and make more money off of it. They wanna make profit off of you, right? You can do the same thing. You can borrow that money and then use it to invest to create more. So for example, I had a client who actually was looking at wondering how to make it work. One of the things they did have was equity in their home. Now, we looked at some of the equity they had. We realized we can, one, actually pay off some of their other loans that they had. So we actually consolidated their debt, freed up $4,000 a month, even before we invested. That was awesome. Freed up $4,000 a month that now they can use to invest more money, right? And then two, with the rest of the money that they had, they then took it and invested it. So they had about $200,000. That extra $200,000 really did cost them about $700, $800 a month. That was the cost to them. But that $2,000 is now making them about $1,700 per month. So do the math. Even if they're paying $800 a month on that, right? Or even just say $700 a month, and they're making $1,700, they're making $1,000 a month for free. And I say for free because what I'm saying is they didn't use money out of their own pocket. They got equity out of their house that they did nothing for. Let's be honest. You didn't do anything in your house really to make money in equity. All you had to do is sit around and let the market do it, right? That equity came essentially for free, but now they're able to leverage that money from using that money, borrowing it from the bank, to then use it to make $1,000 more a month than what it cost them. Guys, that's pure profit. That's an infinite rate of return, and that's exactly the kind of return banks like to make on you. So guys, that's the key, is that you need to understand the rules of the bank, understand that arbitrage, where you could take people's money, use it, including the bank's money, using that to make more money from yourself by investing in real assets. If you think this is great, check out this next video about how to make $5,000 a month in passive income right now. And if you haven't done so already, go ahead and click on subscribe. Subscribe, make sure you see the reminders of other videos that we have produced here. And if you've done this, if you've actually arbitraged and make this money work for you by turning the rules of the bank around, go ahead and put it in the comments below. I'd love to hear your story of how you did it yourself.